All right, welcome to The Explainer. Today, we are going to pull back the curtain on something that's, well, basically the engine of our economy, the securities market. It's this incredible place where companies find the fuel they need to grow, and where our savings, well, they can potentially be turned into real wealth. So you hear this phrase all the time, right? Some hot new tech company is going public. But what does that actually mean? It's not just some one-off event. Nope, it's really the start of a whole journey for a company's shares. So that's what we're going to do today. We're going to follow the life of a share, right, from the moment it's created all the way to its life out there on the open market. And this whole journey, it really plays out across two very different but totally connected parts of the financial world. They might look different on the surface, but trust me, they are completely inseparable. And if you get how they work together, you'll see exactly how a great idea actually finds the money it needs to become a real thing. Okay, so here's how it breaks down. On one side, you've got the primary market. I want you to think of this as like the delivery room. It's where brand new shares are born and sold for the very first time. And then you've got the secondary market. This is the big, bustling city where those shares go to live out their lives, getting traded back and forth between all kinds of investors. So let's start at the beginning, right? In the primary market. This is really where all the magic happens. Picture this. A company decides, hey, we need to raise some serious cash. Maybe it's for a new factory or some cutting-edge research or just to expand. And how do they do it? They create and sell brand new securities straight to investors. Now, when a company decides to offer these new shares, they basically have two paths they can take. The first one is a public issue. And yeah, it's pretty much exactly what it sounds like. It's an open invitation for pretty much anyone in the general public to buy in. The other path, that's a private placement. Think of it as a more exclusive VIP event, where the shares are only offered to a very select group of investors. And that right there brings us to the big one, the most famous event in the entire primary market, the IPO, the initial public offer. This is the company's grand debut. It's their very first time selling shares to the public, and it is a huge milestone. It literally transforms a private company into a public one and, of course, raises a ton of capital to fund all that future growth. Okay, but what happens if a company is already public and they need more cash later on? That's where the FPO comes in, the follow-on public offer. It's honestly just like a sequel to the IPO. The company's already out there, it's listed, but they decide to create and sell more new shares to the public to raise even more capital for their next big thing. Okay, so once these shares are officially born through an IPO or an FPO, they pack their bags and move into their new home, the secondary market. And this is what most of us are picturing when we say the stock market. You know, the world of blinking tickers, complex charts, and all that daily trading. And here's the absolute key difference you have to get. The company that first issued the shares, they're not involved in these trades at all, not one bit. This is purely investors trading amongst themselves. And what that creates is something absolutely essential called liquidity. It's just the simple confidence that you can buy or sell your shares whenever you want to. And that confidence, it's everything. I mean, think about it. Without a trusted liquid secondary market, why would anyone ever buy brand new shares in the primary market? They couldn't. One simply cannot exist without the other. You might think a trade happens in a blink of an eye. And in a way it does. But there's actually a whole three-step process going on behind the scenes. First, you've got the trade itself. That's just the buyer and seller agreeing on a price. Easy enough. Then comes clearing. This is where the system's gears turn to confirm who owes what to whom. And finally, it all wraps up with the settlement. That's the moment the money and the shares officially swap hands. The secondary market also has, let's call it, an advanced level. And it's full of these really complex tools called derivatives. You've probably heard some of the terms thrown around, like forwards, futures, or options. Look, we're not going to dive deep into those today, but it's good to know they exist. They're basically just specialized contracts that more sophisticated investors use to manage risk or, to speculate on where prices might go. Okay, so we've got these two markets, the primary and the secondary. But what makes them actually work? How does it all hold together? Well, the answer is a whole group of what we call intermediaries.
And honestly, they're the unsung heroes of the whole system. They're like the plumbing or the operating system that keeps the entire financial world running smoothly.
Right at the very center of it all is the stock exchange. And you gotta forget those old movie scenes of traders shouting on a physical floor. Today, it's a super powerful electronic platform. It's the central meeting place where millions of buy and sell orders come together and get matched up, all anonymously and incredibly efficiently. But that raises a question, right? How do you get your order onto the exchange?
Well, that's where a stockbroker comes in. You absolutely need one. Think of them as your registered agent, your personal gateway to the entire market. You and we can't just walk up and trade directly on an exchange. It doesn't work that way. Every single transaction has to go through a licensed broker.
And another thing, when you buy that share, you're not getting some fancy paper certificate in the mail like in the old days. Nope. Your ownership is just a digital record, a line of code. And that record is held super safely in something called a depository. It's basically a high-security digital bank just for your investments. So, okay, that makes your shares secure. But how does the system make sure the trade itself is guaranteed?
This is where the real genius of the system comes in, how it builds trust. I mean, just imagine, what if the person on the other side of your trade just vanishes, bails on the deal? That's where the clearing corporation steps in. And it is a truly brilliant solution. It literally becomes the buyer to every seller and the seller to every buyer. It acts as the ultimate guarantor, completely eliminating the risk that someone won't follow through and making sure every single trade gets settled, no matter what.
All right, so we've journeyed through the primary and secondary markets. We've met all the key players that keep the whole thing running. So now let's step back for a second. Let's connect all these dots and ask the really big question. Why does this whole complex system even matter? Well, here's the big picture. For companies, it's the fuel they need to innovate and grow. Simple as that. For investors, for you and me, it's the system that lets us take our savings and turn them into investments that can grow over time. And for the economy as a whole, it's how we figure out what things are actually worth, what's called price discovery. And it acts like a real-time barometer of our collective economic health. When you boil it all down, the securities market really serves one incredibly profound purpose. It connects great ideas with the money needed to make them real. It truly is the circulatory system of our economy, pumping capital to the innovations that shape our world. Which, it just leaves us with one final thought. What's the next big idea that it's going to bring to life?